The smell of spring is in the air. And when we think of spring, we don't just think of flowers and footy nuffies and hay fever. We think of the craziest time of year in the Australian property market. But with all the doom and gloom of rising interest rates and the cost of living increasing, should sellers be wary about listing their property on the market this spring? Let's take to the streets of Melbourne to find out. Do you think now would be a good time to sell a property?
No.
To be honest, I don't follow that closely, but I know from friends and stuff it's just not a good time to be in it at the moment, yeah.
Watching the news at the moment, and I'm seeing that it is affecting prices and buyer sentiment, but then I see conflicting reports of high auction results. It's a little confusing.
People say that prices are on the down, but I would disagree. Right now people are still cashed up, they've got money to spend, and properties are selling.
Callum Kusha is the Executive Manager of Economic Research at PropTrack. In other words, he knows a thing or two about the Australian property market.
It's understandable that interest rate hikes are changing people's perspective about the housing market. Any decline in property prices we see over the coming years needs to be put in the context of the very strong price growth that we've seen recently. And we are expecting that in most parts of the country, property prices are still going to be higher than they were at the beginning of the pandemic.
So what do real estate agents think? Well, I spoke to Callum Richardson to get his perspective on the upcoming spring.
With lower stock levels on the market, we're seeing increased competition, so I would actually still recommend now as a good time to sell, particularly before we enter into spring where stock levels will increase and there will be more choice for buyers on the market.
That's all well and good for sellers, but what about buyers? If I'm buying a house this spring, how do I know that my newly purchased property won't drop in value?
In early 2002, the typical mortgage rate was around 6%. By late 2006, it had increased to around 8%, both of which are significantly higher than interest rates currently. And even though interest rates increased, we saw property prices over this period increase dramatically. It was coming off slower growth leading into 2002, and the main difference we're looking at now is we're seeing interest rates increase following a significant increase in property prices over recent years.
So if history is anything to go by, could this be a small bump on the path to more property growth in Australia? I should have spent more time worrying about my sinuses. Whew.